What's going on, guys? Welcome back to the channel. My name is Anfernee McLemore, and in this video I want to talk about how to build wealth with ownership investments as a teenager. So the plan for this video is to break down what ownership investments are, how exactly they work in terms of you being an owner of a company but not being able to control anything, and also how you can get some free money by going into the description below and sign up to the public app, where if you sign up and create an account, they will give you a free fraction share of a stock just for you going over there and signing up. So let's talk about what ownership investments are in the first place. And what an ownership investment is, or what a type of ownership investment is when you own an interest in a particular asset, such as stocks, real estate, or even a small business. And I want to make it clear that when I say ownership investments, it doesn't always mean that you own the entire thing. Obviously, if you bought a share in Apple or Amazon, you don't own their entire company, as well as if you owned an interest in a small business, more than likely you may not own the entire thing. So this video is going to revolve around ownership interest in particular assets, not necessarily you owning 100% of the whole thing. And some of my favorite types of ownership investments I'm going to talk about in this video are going to be stock market investments that I talk about a lot here on the channel, as well as real estate investments that I mentioned briefly here and there. I won't really cover small business ownership interest because I plan on making a whole series revolving just around how to start a small business, how to get it up and running, and how to keep it profitable from overhead expenses, accounting from taxes, the whole 9 yards. So I'm going to break that up into a series of videos. But let's get back into those ownership investments. And before we get too crazy into the whole idea of ownership investments, let's break it down as to the main reason that I think that anyone should start investing, regardless of how much money you want to make. Why should you start investing in the first place? And I think a simple answer to that question, if you're not taking into account financial freedom, if you're not taking into account you want to be a millionaire, the simple answer to that question is inflation and how to counteract inflation. You see, what inflation is the devaluation of your dollar compared to what it was a year ago or even a few years ago. And because of inflation, the buying power of your money decreases every single year. That $1 that you had in 2019 is worth a little bit less in 2021, even less in 2022, and so on and so forth. So if you just have all of your money in your wallet in cash and you plan on saving that money for some date in the future, that money is going to be worth less just by sitting in your pocket. So one of the best ways to counteract this is to actually buy assets that increase in value, at least with the rate of inflation, but ideally above the rate of inflation. So that way, not only are you not losing money, but you're also gaining money over time and becoming wealthier. It is not everyone's goal to build wealth. It is not everyone's goal to try to be a millionaire by investing in the stock market. But I believe that most people, especially someone who's watching this video, would like to make the conscious decision not to lose money if they can't avoid it. But one of my favorite type of ownership investments that I talk about a lot here on the channel, I mean, I guess 95% of my channel now is just on this type of ownership investment, and that obviously is going to be investments in the stock market. Now, if you're trying to explain to someone who's just getting started in the stock market that if you buy a stock, you now own an interest in that company, they may be able to go and think that they can walk into the company headquarters and start bossing people around because technically they're a part owner of the company, right? Well, that's not exactly how it works, because when you buy a stock, you are considered a shareholder in the company, and by being a shareholder, you are then allowed to vote on different policies of the company to make sure that they have their shareholders, or you and your peers, best interests at heart when making money in the future. And this type of investment only occurs with public companies, because with private companies, they don't issue shares to the public. They may issue shares to private individuals, but not to the mass public. And with a private company, they don't have to adhere to as many strict guidelines by the SEC. But a way that you can build wealth through ownership investments by investing in the stock market is simply by buying individual stocks or by buying index funds and then holding those assets over time. When you buy a stock or an index fund, you are essentially making money in 2 or 3 ways. One of the first ways that many people talk about and many people focus on is through capital appreciation, and this is when the value of your purchase goes up. So if you buy a stock or index fund at $50, if it then goes up to $55, that will be $5 of capital appreciation. But you can also make money in the stock market in the form of dividends as well. And dividends are when a company pays a portion of their net income out to their shareholders based on how many shares that you own. So if a company had a 75-cent dividend per share and you own 10 shares, you would then get $7.50 on an annual basis from that company. And that $7.50 would typically be paid out quarterly. So you'll be getting a little bit less than $2 a month. But if you had 1,000 shares, your dividend income would increase as well. And then you would still be taking advantage of capital appreciation at the same time. Stock market investing is one of my favorite forms of ownership investing because the barrier to entry is so low. You don't have to be a millionaire to start getting invested in the stock market. You can start with as little as $1. And if you sign up to the public app using the link in the description below, you can start with $0, as they will give you a free stock for literally just signing up. And the second big category of ownership investments that you want to make sure that you are at least aware of is going to be investments in real estate. Now, real estate investments investments come in many parts. And one of the ones I like to talk about here on the channel a lot is rental property investing in real estate. And what rental property investing is when you go out and buy a house that you now own for the purpose of putting a tenant in that house and then allowing that tenant to pay you rent. Now, this is a big ownership investment, and it actually allows you to build a ton of wealth for the simple fact that when you invest in real estate, you are allowed to take advantage of much more leverage than would be ever allowed in the stock market itself. When you're buying investments in a stock market account, you're typically allowed to buy those assets or securities with only money that you have in your account. And you may say, Anfernee, what if I get a margin account? Okay, if you get a margin account, usually they give you 50% of the value of your account to go and then invest with margin. So that means if you have a $1,000 account, if you want to open up a margin account, they would then give you $500 of extra leverage to then go buy assets with. However, with real estate, unlike almost any other investment class out there, you are routinely allowed and encouraged to use 80% leverage, 85, 90, 95% leverage on these assets, and then paying back those levered loans over 30 years at a pretty minimal interest rate. This means that you are allowed to take control of $100,000 assets with as little as $5,000 to $10,000. That would be almost unheard of in the stock market. And leverage isn't the only advantage of real estate. You can also make money through real estate in the form of cash flows, which is any amount of rent that is above your expenses that your tenant pays you on a month-to-month basis. So if your rent is $1,500 and your all-in monthly expenses are only $1,000, then your monthly cash flow would be $500. You then make money through the form of appreciation as the value of that house goes up over a year-to-year basis. You will make money in the form of depreciation as well, as you depreciate the value of the house on your taxes, so you owe less money to Uncle Sam. And the last way you can make money through real estate is in the form of principal pay down. When your tenant actually works to pay down your loan for you, your levered loan that we just talked about, you don't even have to pay it back yourself because your tenant will be making rent payments and you will then be using those rent payments to pay back your mortgage. Real estate investing is a fascinating asset class, and it is not all sunshine and rainbows, so it is important to do further research before trying to get into this. However, for someone who has the risk tolerance for it, it has been statistically proven to make the most millionaires in the United States. And honestly, I'm trying to be a part of that millionaire list myself one day. But earlier we talked about how inflation was eating away at your buying power. So now I want to actually show you a real life example of how that works so you can get a full understanding of why it is so important to start investing as early as possible. So on my phone, I have pulled up here an inflation calculator. It was simply the first one that I saw when I Googled inflation calculator. And we're going to put in a hypothetical scenario for myself here just to see how this works. So when I was graduating high school, I got about $500 worth of graduation gifts. So I'm going to put 2016 in a top number and $500 on the right bar. So I want to see the difference of if I had kept that money in a savings account versus if I had that money invested in the stock market. So if I put that $500 in a savings account in 2016, as of the year 2022, that $500 will be worth $455.41. I had to switch the calculator because the other calculator was showing what the cost of something would be versus the actual value of the money. So the actual value of the $500 will be $455 today, or $45 less, even though I didn't touch it at all. And if I had this money invested in the stock market, assuming a 7% rate of return, if we multiply $500 times 1.076 times, we should be able to see what the $500 would be worth today, hypothetically. So let's do 1, 2, 3, 4, 5, 6. And just like that, we could see that we would have $750 if we had invested rather than $455, even though we didn't touch it in both periods in the savings account. So this truly shows the power and the reason of why you should be investing. But with all that being said, I really hope you enjoyed this video. If you found any kind of value in this video, then tap that like button for your boy, as it does help the channel out. Also, as a gift from me to you, head down into the description below, where if you use that public link and sign up to the public app, you will get a free fractional share of your stock, and it could be valued up to $300. That's a great way to take advantage of some free money, as all you have to do is sign up for an account, push a couple buttons, and you get some free money. However, as I said, I hope you did find value in this video, and I'll see you in the next one, guys.